Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for the 3-day Precious Metals and Critical Minerals Conference. The next presentation is from Blackrock Silver. Please note you may submit questions for the presenter in the box to the left of the slide, and you can view a company's availability for one-on-one meetings by clicking Book a Meeting. At this point, I'm very pleased to welcome Andrew Pollard. He's the President, Chief Executive Officer, and Director of Blackrock Silver, an OTCQX Best 50 company, which trades under the symbol BKRRF and on the TSXV under the symbol BRC. Welcome back, Andrew.
Thanks, John. It's good to be back in front of you all here. It's only been about 2 months since we last presented at the last OTC conference in early December, and that led to a December to remember. As John mentioned, just a few weeks ago, we were awarded with, I guess, our place as part of the OTCQX Best 50, where we ranked 16th out of 50 companies in terms of our performance last year. And anyone that listened to my presentation back in December is now sitting on a double in terms of share price. We've seen incredible volume. Last month in Canada alone, we traded $130 million worth of stock. And I guess the best part about my presentation now versus back then is that the same catalysts that we had back then, we're still looking forward to, now only much more imminent. So if you're worried about missing the show, the key things we're trying to achieve this year are only that much closer. So happy to get back in front of you. And for those that haven't heard the story, what I'm going to be telling you about has the potential to not only be one of the largest silver producers in all of America, but it also has the potential to be one of the lowest cost silver operations in the world as we work towards our goals of bringing this back to production for the first time in nearly 100 years since the old timers last stared those veins right in the face. Certainly going to be making some forward-looking statements. In fact, I'll try to speak only in forward-looking statements, but just caution that everything I say, but most of it, well, a lot of it is in my control, some of it isn't. But if we de-risk and work the plan that we've got laid out, this project's going to be an absolute unicorn with respect to the silver industry as we march it forward. So just high level, looking at where we are now, we're about $550 to $600 million market cap, depending on the volatility of the day. Granted, the volatility is where you guys make all your money. We are cashed up. I guess the biggest thing that's happened since my last presentation a few months ago is we raised an additional $15 million just from two groups. One by the name of Eric Sprott. And, most of the time when you do equity financings, your stock tends to get slammed quite aggressively. In our case, it traded up on the news because that equity went to the definition of great hands. As many of you know, Eric's been our largest shareholder and largest supporter, both in the markets and writing checks directly to the company since we really got going back in 2020. In terms of where we're at now and treasury wise, we're sitting on about $25 to $27 million. And we're in a unique position in the sense that we've still got something in the order of $15 million worth of in the money warrants that are poised to come in over the next 12 months. And what's nice about those warrants is it's truly, every month we're actually ending up with more money in our treasury as opposed to less, which is a unique situation for an exploration and development company like ourselves. But we're in a really, really good position financially. And we really only started hitting our mark from a market perspective last year. Last year, our project really started answering the unanswered questions in a big way, right as the silver and gold markets really went on a run. So our project has stepped into the spotlight right at the very time that the world's starting to give a damn about silver developers again. And last year alone, we were included into two major ETFs, the SIL, the Global X Silver Miners ETF, and the Sprott Physical and Silvers ETF. And what's interesting about that is, sure, a rising tide raises all boats, but our allocations in both of those ETFs has gone up dramatically. When the SIL first gave us inclusion back in May, they started with 5 million shares. Now they're up to well over 10 million. With the Sprott Physical and Silvers ETF, we were truly at the bottom of the barrel in terms of their holdings. And over time, we've now moved up quite a bit to the middle. I think they started with under 500,000 shares, and now they're up to something like 8.7 million. So we're truly sort of leapfrogging over a lot of other peer companies. And, I expect that to continue to be the case. We're still blue ocean for a lot of other ETFs out there. For example, the SILJ, which is seen to be focused on more junior silver companies than the SIL. We're not in there yet. Their next rebalance is in about 2 weeks. So I think, I don't know. They don't tip you off, but I think we're sort of a shoe-in for that. And if not this rebalance date, certainly the next one, because they do it quarterly there. But being in those ETFs really, really jogs liquidity, and we've been seeing that. So not only has our stock been performing incredibly, delivering some fantastic returns, but the liquidity is there, making us, just a really liquid, I'd say safe story, I guess, because, you can get your money in and you can get it out if you want to. So, this is a project that really stands out in the industry. As most of you know, most silver is produced in Mexico, Argentina, Bolivia, China, Russia, even a little bit in Canada. In terms of safe jurisdictions, there's truly nothing like this out there in the world right now. We're the only silver emerging developer that's pursuing permits and is seeking to break ground on development work during the Trump administration here. And as many of you know, they just are going all in on critical minerals, of which they just named silver to it. So when it comes to companies that stand to benefit from silver being designated to the critical minerals list in America, it's truly a universe of one. Now, we don't need the help when it comes to permitting because we're already looking at a very expedited permitting process, given our projects on private land in Nevada. But where that does truly come into play is the government is taking a very pragmatic approach to backstopping and helping to finance through many different mechanisms, stories just like this. Our project, if it walks forward the way it looks on paper, has the potential to be, a top 4 silver producer in America and easily the lowest cost one, not only there, but even in a global context. There's very few projects out there that can compete with this on an all-in sustaining cost basis. And that's because of our grade. It's because of our easy metallurgy. It's just gold and silver when I'm going to be talking about silver equivalents here. And then it also has a lot to do with the location, not just the jurisdiction, not just being in America is good, but we're not remote. We're right off the highway, right next to a town. There's a brand new substation right at the base of our project. This is truly mining country, USA. So we only made our discovery, I guess, 5.5 years ago or so. And since then, we've now delineated over 108 million silver equivalent ounces. Now, when I'm going to be talking about figures, both in terms of resources and in terms of the economics with our last PEA, all of those are completely stale now. I said when I started this that one of our biggest catalysts of the year is imminent. It's right before us, and that's going to include a brand new resource and a new PEA. So not only will our ounce figures change, but so will our economics and, in fact, the entire production profile of the project. But for compliance reasons, I can only speak about what we've put out thus far. So I'm going to be referring to our 2024 PEA. The grade profile between our indicated and our inferred resources that we've got laid out equates to about 0.5 kilogram per ton silver equivalent, and that's with that's block diluted grade. So that's actually with a lot of the dilution factored in. So 0.5 kilogram per ton, it's roughly going to be similar head grade that you'll see in a mining scenario. And there's very, very few projects globally that have anywhere near that. So our 2024 PEA, which was our first time we'd wrapped economics and a mining plan around our resources, outlined an operation that has the potential to produce about 8.6 million silver equivalent ounces per year at under $12 all-in sustaining costs. We used a $1,900 gold and $23 silver base case for that. And even there, you were looking at eye-watering economics. You had a 2-to-1 NPV to CapEx ratio. You were looking at a 40% after-tax IRR and a 2.3-year payback period. You know, a lot of companies talk about $80 silver, $100 silver, $200 silver. The best thing about a project is we don't need that. At $23 silver, this is something that you'd see push forward regardless. Grade is king. In September of 24, when we put that out, we used an upside case of 2280 gold and 2760 silver, and there you're looking at an NPV of just under $500 million US. As many of you market observers know, silver and gold prices are multiples of that now. Since that PEA came out, we've done a heck of a lot of drilling, over 45,000 meters of core drilling done at the project, both to move our inferred ounces over to the indicated size, so increase the confidence of those ounces, but also we're focused on adding a lot more ounces. That's what's going to be included in this upcoming PEA. As you can see, our project, it's located halfway between Las Vegas and Reno. The highway that connects Vegas to Reno actually cuts right across our project. So you've got everything at our project. You can work it 12 months of the year. There's power. You don't have to permit roads. There's 15 hotels and motels literally within walking distance of the thing. You know, we can hook up right up into the utility with it when it comes to even just getting our water. A lot of our drilling contractors just hook up to the fire hydrants to fill up the water trucks. So it's truly unlike any mining setup in the world other than maybe Val-d'Or, Quebec. It's as good as it gets. Now this project, this district, you know, in modern concepts, until we started working it, completely forgotten about. But this time 100 years ago, Tonopah was referred to as the richest place on earth. It was discovered in 1900, and over about 30 years of production history, this district produced about 400 million silver equivalent ounces. Now that production, it came at about a 100-to-1 silver to gold ratio. So that 400 million ounces, about 174 million ounces of silver and 1.8 million ounces of gold were produced. But what's even more impressive from that is that all of that production came from just 7.5 million tons. We're the first group to come in and consolidate this land package and bring exploration, really starting off from the last two operating mines in the district. And since then, we've now drilled out about 4.5 kilometers of what looks to be cohesive, intact mineralization, the same stuff that these old timers were mining back in the day. So, you know, this is going to be a very, very small footprint, high yield, high margin underground mine. This last PEA that we did in 2024 was using a conceptual mill of 1,500 ton per day in terms of the throughput. What we're looking at now in terms of all of the, I guess, success we've had on the drill since this last came out, as we're actually doing some trade-off studies behind the scenes leading up to our PEA, looking at increasing that throughput ratio, which will hopefully see the production profile go up and costs on an all-in and cash cost basis come down. The bigger the mill, the lower the cost typically. So we're hoping that we can bring this up to potentially 10 million ounces or more come this next PEA, which we're expecting to have certainly by the end of Q1. And yeah, I'd say it's weeks, not months, but we're sort of in view at this point. So that's one of two key re-rates that we're looking at this year. The second one being all of the permitting initiatives we've got underway that I think is going to put a major step change in our valuation once we get this permitted. You know, what's nice about this operation is not only do we have the grade profile working to our advantage, not only do we just have the silver and gold aspect of it, meaning there's nothing else mixed into our silver equivalents. There's no base metals. And why is that important? It's important because it makes processing the ore significantly cheaper and straightforward. You don't have to go through all the extra steps. You don't have to have flotation. You don't have to get smelters involved. So it's cheap, higher grade, cheaper to process. And last but not least, it's the geometry of the deposit. In terms of our mining methods, about 80% of the mining's going to be done via long hole stoping, with the remainder being cut and fill. Long hole being, both are conventional underground mining methods, but long hole is significantly cheaper than cut and fill. So we've got even the geometry of the deposit working to our advantage. You know, even though Nevada is known as the silver state, if any of you have been driving in the car in Nevada, you've seen Welcome to the Silver State. They don't really produce all that much silver in America. Last year, they only produced 32 million ounces. So if I were to break down our 8.6 million silver equivalent ounces per year, you're going to be producing something in the order of 4 to 6 million ounces of silver each and every year, and between 55 and 70,000 ounces of silver each and every year. Just our silver contribution is going to jog domestic production by up to 15% for America. So this is a big, big deal when it comes to bringing domestic production back onshore. And in terms of how this project's going to rate, this is how our production profile relates to every operating silver mine in the world currently. What you'll see is that our production profile lines up very well with San Dimas, it lines up very well with Santa Elena, and it lines up very well with Las Chispas. Now, all three of those projects were once single asset companies, just like Blackrock, that got acquired for big, substantial premiums as they neared or were in commercial production. Now, what should stand out, though, is our cash costs. At $11.96 all-in sustaining, as you'll see, this has the potential to be the lowest cost mine in the world, maybe neck and neck with Juanicipio. Truly, as we walk this forward, this is going to be a standout globally. The ones I highlighted here, and I made the mistake of doing that before the presentation, as these highlighted projects are faded a little. These are every other large silver primary producer in America. So what you'll see is not only on a global basis does our production profile stand out, but in terms of American domestic production, this is top four. As I said, a big, big deal. I'm not going to go too deep into the resource estimate, just as I don't want to run out of time and I want to take some questions. But really, the thing that stands out here is the grade. So our last resource, which came out in September of 25, that was focused just on converting inferred ounces to indicated. And really what we focused on was starting from the start of our mine plan. So using that mine plan that was the basis for that 2024 PEA, and just de-risking the operation from the start. And what you'll see is we have 180 gram per ton cutoff grade. Well, if you look at just our indicated grades, you'll see 220 grams silver, already well above that cutoff grade, and 2.5 grams gold. Each of those independently is significantly above the cutoff, meaning irrespective of which of those metals we'd want to show as a byproduct credit, you'd be producing or showing negative, significantly negative cash costs for the others. So this is the definition of robust operation. You know, the two biggest catalysts we have this year are first, this upcoming resource and PEA, which, as I said, are coming down the pipe imminently. And the other are, you're going to see multiple news releases this year as we achieve or advance on key permitting. everything we're doing on the ground this year is to put us in a position to have big yellow trucks show up at the project next year and break ground on our underground portal and test mine area. That means if we break ground in 27, we should be in a position to be doing a significant bulk sample and test mine in 28, meaning we'll start to see revenue from there. This is Tonopah today. It's a very historic, charming mining boomtown. But this is Tonopah back in 1900 when it was first discovered. Tonopah at the time was one of the most modern mining camps in the world. And as I said, in the early 1900s, it was referred to as the richest place on earth. We're not, you know, even though this is new in the context of the market, all of the records on this thing, you know, go back a generation. And really, the story of Tonopah is really just, it was thought to be an east-west district. So originally, that 400 million silver equivalent ounces was discovered right over here, where the town of Tonopah is actually situated today. And then over that 30 years of production history, it went to the west. So the west side represents the blue sky. It represents where the last mining in this district was, right at the emergence of the Great Depression. And it represents exactly right where our project starts and where we're picking up 100 years almost to the day that those guys left off. Now, people often ask me, you know, permitting has never really kept us up at night as a concern. And one of those reasons is we're right next door to a big federally permitted, shovel-ready, bulk tonnage heap leach operation, which is this area down here. This is owned by a company called Westvault Mining, and it directly abuts our project to the south. And they're, you know, unlike us on BLM claims, not patented, meaning they had a lot more hoops to jump through, and they're a big dirt moving operation as opposed to something that's very constrained and small footprint. And they've been shovel ready and waiting for something to happen for the better part of a few years. But I guess what I'm getting at is not only is permitting not a concern, but there's significant bolt-on potential to really consolidate this district and turn it into a tier 1 mining camp overnight. Now, our 108 million ounces that we've got laid out, that's these red areas here that are shown on the screen. Now, we don't have 3 different deposit areas. This is one portal, one decline entry gets you to every area of the property. When we're drilling expansion ounces, we're not drilling a target over here and a target over here, satellite deposits that would all require their CapEx. What we're drilling, every single drill hole that we have at the project is bolt-on extension drilling, meaning very, very low economic threshold, high ROI in terms of what we're bringing on. Between now and next month, my goal is this slide that you'll see will have a hell of a lot more red on it because we had a substantial amount of success on our expansion drilling. And the areas that I've crudely highlighted here represents all of the new expansion drilling that we've done since our last PEA came out. So we've added hundreds of meters of strike in both directions. And the purple areas represent the low-hanging fruit for us to continue drilling out this year on the drills in terms of moving this forward and really just killing time until we can break ground on this thing and get closer to there. You know, this project's still open along strike. We're going to be testing some holes to the northwest as this vein system looks like it wants to keep going. We're going to be bringing the drills back shortly on another round of expansion and infill drilling to convert more ounces and really just close all the gaps on the project so that really all of this becomes red one day. By the time we're underground, I expect all of this outer ring of mineralization to be red. In the interest of time, you know, we've only got 5 minutes left. I'm going to take some questions now, but really, if I can just impress upon 2 things for you. This is truly a unicorn in the industry. There's nothing like this from a jurisdiction perspective, from a grade perspective, or even a metallurgy perspective. Most every other company marching forward towards development is polymetallic. And we've got two major step changes that are going to have effects on our multiple this year. The first is obviously more ounces and bigger, better economics. And the other is walking this forward and achieving key permits over the coming 12 calendar months or so, allowing us to start planning for breaking ground next year. So with that, I'll take some questions. Okay, so I've got a question. Will your cutoff lower for the upcoming resource in PEA? I suspect it will, ever so slightly, just to factor in updated or not current metals prices, but we tend to use the 2 or 3 year prevailing averages. So as metals prices move up, that means the cutoff grade will be lowered. Now, that's not going to change things too much for us in the sense that these are very constrained veins. You're either in the vein or you're not, or you're out. So we're not looking at big halos of low-grade mineralization that will really move the needle for us. So the cutoff grade will likely change. I don't know what it will be, but I don't really expect that to bring on or dilute our grades down significantly. It'll bring in some lower grade tons that might not have made the cut on the previous PEA, but I don't expect that to change. What's going to be the biggest lever for us is all of the mineable ounces, the ounces that we've drilled out and brought into this mine plan in the next over the last year and a half or so. Okay, just a question about the costs. What's the expected new cost for the build out? You've got to wait and see for that. I mean, that's really what the PEA is. It costs everything out, and also runs the everything through Stope Optimizer. And you've got your development capital. You've got your mill. You know, as I mentioned, we are looking at the potential for increasing the mill size from 1,500 to potentially 1,800 tons per day, potentially 2,000 tons per day, which would see a incremental change in the mill and surface facilities costs. Granted, you know, with that investment, you're able to bring a lot more production through earlier on in the mine life, and you tend to see significant reduction in overall costs for the project over the life of mine. So the last, the question is, the last PEA had 66 million mineable ounces in the mine plan. That's correct. So yes, the goal with any PEA and any study is to obviously, you know, we're not focused. We're past the point of worrying about just drilling out random ounces. We're not a mineral inventory play. We're a mineable mineral inventory play, and that's really the nice thing about all of the drilling that we've done since then. So yes, we do expect to see quite a step change in mineable ounces, those ounces from that 66 million ounces that were a part of that original PEA to where we're at now. And obviously that's, you know, what we're focused on is increasing the mine life. That last mine life had about 8 years in it at 1,500 ton per day. Our focus is to get it to around 10 years. But of course, if we can increase the mill throughput, then that would be the dream scenario for investors. And if that's the case, you'll see a lot more mineable ounces in there. So that's really the big thing. Obviously, I want to see as much red as possible on these slides here. But the big thing is mineable ounces, and that's really what we're after. How much does Eric Sprott own personally of BRC? He's right under 20% right now. You know, as warrant money, as warrants get converted into shares, you know, that does see it get diluted a little bit. But Eric's sitting on, you know, he still has about $3.5 million or so of 50-cent warrants that expire in May. So we're going to be seeing probably a significant personal check from Mr. Sprott coming in the door over the coming months as well. And have we had any contact with the U.S. central government since we got started? We're definitely on the radar. Once again, in terms of silver companies positioning to get permitted and break ground during this administration, it's a universe of one. So I can assure you we're on the radar. And I think the jumping off point would be for any sort of tangible discussions to really pick up would be once we come out with our new economics and once we start achieving some of the key permits that we're going to be getting over the few months. So with that, I'm coming up against the clock. Feel free to reach out to me at andrew@blackrocksilver.com. Thank you.